Over the weekend, Justin Trudeau said Canada will stick with plans to retaliate against U.S. tariffs on steel and aluminum. President Donald Trump's trade restrictions put thousands of Canadian jobs at risk. But while metal tariffs will hurt the Canadian economy more, they could also hit American workers. According to a new report from the Howe Institute, 6,000 Canadian jobs could be lost because of tariffs. That's compared to more than 22,000 in the U.S., of course, out of a much larger labor market. The report also suggests retaliatory tariffs will hurt Canadian economic growth a little harder. Joining us now is the author of that report. Dan Ciuriak is a fellow in residence at the Howe Institute and director of Ciuriak Consulting. Dan, great to see you again. How bad could this get for the Canadian economy?
Well, in the first instance, Peter, these are fairly small hits. They're not welcome, of course. In real GDP terms, Canada would suffer a decline of about 0.11%. And that would be something that you might feel in a bad quarter, sort of a disappointing quarter. In nominal terms, the hit to GDP is a bit larger, about 0.33%, and that reflects the fact that Canada suffers in terms of trade losses when the Americans put on tariffs on us. These are very high tariffs. Canadian exporters would have to price down to try and stay in the market, and generally speaking, prices would fall in Canada, so our GDP would be about $8 billion lower overall.
Is the concern in, like, when you actually sit down and crunch the numbers on something like this, and we certainly appreciate that you have, is the concern that you draw that, okay, this is bad, it could be a lot worse, these numbers aren't sort of, jaw-droppingly bad, is the concern that a trade war like this has a tendency or an ability to escalate pretty quickly, and we're already seeing that. I mean, Trump over the weekend was threatening tariffs on the auto industry. Getting out of it can be hard. If this is our starting point, how concerned should we be about that escalation?
Well, I think we should be concerned about escalation. First of all, when we retaliate, that will probably more than double the pain for Canada. Right after Mr. Trump was elected, we ran an exercise through a study at the Howe, which looked at protectionism and retaliation, and basically the retaliation doubled the ante for Canada. It did take away the benefit for the U.S. of imposing tariffs on us, but that comes at some pain to us. And Mr. Trump can only apparently escalate. He does not de-escalate. So this would not be the last shoe to fall. I guess in terms of the logic of retaliation, textbook theory says that if you're in a repeat game, we'll be trading with the Americans for decades and centuries, that tit for tat is the right policy. So if someone defects from a good bargain, then you have to retaliate in kind. That's exactly what Canada's doing. The underlying assumptions are that this is a repeat game with a rational actor. And I guess there's a lot of concern that we're not seeing rationality on the other side.
You know, I spoke with Robert Reich about this. I spoke with Flavio Volpe about this. We've spent decades integrating our supply chains throughout North America and making these North American companies more competitive. Trying to unwind that is going to be incredibly difficult from the outset. But I guess the way it would unwind would not prove to be very good for Canadian competitiveness. What is the broader risk to Canada's ability to compete in a North American market if we start to put blocks in that supply chain that we spent so long integrating?
Well, first of all, Peter, putting up these blockages within the North American supply chain makes the entire North American economy less competitive. Our results show, kind of surprisingly, that the loss of steel exports by China, Korea, Japan, the EU to the United States would be more than compensated for those economies by the improved competitiveness that they have in downstream markets like machinery and equipment and automotive. So they actually come out ahead. The whole North American economy tanks as a result of this. So this is bad for the welfare of the entire North American economy, and that's hard to undo if these tariffs stay in place for a long time. Now, that being said, if one goes back to the very beginning of the Trump administration, the statements that they made were to the effect that they want to repatriate supply chains back inside the United States to reclaim these industrial jobs that were outsourced by companies for reasons of competitiveness. So they're willing to accept the loss of real income in order to reshape their economy. Peter Navarro, giving a speech to American business economists back in early 2017, said that there was only one company in America that could fix the propellers on Navy submarines. So they want to get those kinds of jobs back, and for that they're willing to give up some welfare gains for consumers. You can think of this as the Jones Act on land. Jones Act is a U.S. statute that requires that U.S. shoreline shipping be on U.S. ships manned by U.S. sailors to provide a reserve for their Navy in times of war. And more or less, this is the thinking in the White House, that they want to have this kind of reindustrialized, muscular America. And it's the Jones Act on land. It's not good for welfare, but they have other purposes in mind.
All right, Dan, we're going to have to leave it there. Always a great pleasure to speak with you, though. Thanks for this, Dan Ciuriak, fellow in residence at the Howe Institute and director of Ciuriak Consulting.